Goodbye, September. Goodbye, unhappiness. Yep, we had a very rough month, and keeping with September's reputation as the worst month on average every year. But now it's coming to an end, and all I can say is good riddance after one more ugly session. Dow sinking to 500 points, S&P and NASDAQ both falling 1.51%. What went wrong? Put simply, the economy was just too darn hot. And unfortunately, it remains that way. Even though commodity inflation is now largely under control, we still haven't solved what I call the WFH burden. No, I'm not talking about that old pandemic salt work from home. Going forward, WFH on the Mad Money set will stand for wages, food, and housing, because those are the areas with the most persistent inflation. The Fed must tame these, and they have to do it by lowering the value of your house and your portfolio, while unfortunately putting your job in jeopardy. What a horrendous but necessary policy, as this kind of inflation will ruin everyone's purchasing power in the end if it remains unchecked. There are the three sticking points that we're dealing with as we go into October. The three key things that the Fed has not been able to get under control. Fed Chief Jay Powell hasn't stopped the wage spiral. There are just too few people in the workforce. A lot of people took early retirement, but they have come back. He hasn't stopped food inflation, which actually comes down to bad weather and Russia's invasion of Ukraine, but it doesn't matter. And he hasn't stopped the runaway cost of housing, although I believe that is about to change with the new 7% mortgage rate. In September, WFH ran white hot. So the Fed decided enough is enough and hit us with our third straight triple rate hike. That's remarkable. That's the chief reason your portfolio got laid to waste and could continue to do so. So we have to ask, will the September nightmare continue? Well, there could be some respites, but I think the nightmare could continue. So let's start with our game plan for next week with that question in mind, because I do believe that the market can have spikes, but ultimately it's going to work its way lower for now, particularly the NASDAQ. Now, we have three events next week that will tell us if October is just an extension of September. First, we get the non-farm payroll report. That's that labor report that comes out. That's the most important thing, 12 of them, and they impact for the whole month, all right? I expect it to show too much hiring, remember, because it's backward-looking, and too much wage inflation, at least as far as the Fed's concerned. Remember, we're in a good news is bad news environment where we actually want to see and hear about more layoffs and lower wages, and more firings, and I don't think we're going to get to that. There's just still too much business in this country. The other two events are speaking engagements by Cleveland Fed President Loretta Mester, okay, right before the open on Tuesday and then again on the close on Thursday. Now, you see, Mester's the primary inflation hawk on the Federal Open Market Committee. I call her the guardian of the galaxy because she is from Cleveland, where the Guardians play, and she wants to protect us, the whole galaxy, from high inflation, even if that means raising interest rates into a recession. And look, she said that explicitly. I'm not putting words in her mouth.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.